Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Now, Vishnu, as always, great to have you on the show this Monday.
Hi, Brian. Thank you for having me. It's a great way to start the Monday, as always.
So, Vishnu, I'm going to start by taking a look at crypto markets, and then we'll take a look at regional markets, and then your insights. We'll start with the Bitcoin, which is at 37,895.5. It's down 3.99%. Ethereum is at 2,523.33. It's down 4.62%. If we start to look at regional stock markets, we see that the SGX is now trading at 3,203.05. It's down 0.74%. Across the region, Bursa Malaysia is at, and we'll take a look at that, 1,578.06. It's down 1.61%. Shanghai is at 3,396.3. It's down 1.5%. The ASX All Ordinaries is at 7,310. It's down 1.15%. The Nikkei is at 25,157. It's down sharply at 3.15%. Hang Seng is also down sharply. It's at 21,126. It's down 3.56%. Rounding up the numbers, we've got the Kospi, which is at 2,658.62. It's down 2.02%. Now, Vishnu, what's the reason for the sea of red across the region?
But I think markets are now, really grappling with the fact that there could be widening sanctions, and there's also a lot of growing tensions that could blow out, particularly with regards to airspace and how the West can aid Ukraine without being seen as getting directly involved in the war. And Russia has, Putin in particular, has warned the West not to interfere by imposing restrictions on airspace, so on and so forth. But I think the one that's hitting markets the hardest is the fact that they may be considering sanctions and embargoing oil trade for Russia, which is why we can probably see a lot of the dependencies playing out in the equities. You can see Japanese stocks are down pretty sharply given the reliance on energy imports and with a much quicker pass-through from Russian energy prices. You can also see this is why this morning Brent jumped up and momentarily tested above $135 on those fears that in fact that could be where the West is headed with the tightening sanctions on Russia.
Now, that's going to have broader implications on commodities, isn't it? And you've got a chart that you want to share.
Yeah, I mean, we just wanted to take a broad look across the various commodities. And you can see the two charts here, side by side, you can see the two charts here. And really what they're pointing to is, if we were to look at this chart on the left here, this is against the average prices for commodities in the second half of last year. So bear in mind, second half of last year, inflation was already high. Over and above that, you've got energy prices, grains led by wheat, and some metals, particularly aluminum, nickel, all surging tremendously. And even if you take a longer term view, 5-year peaks, if you compare against 5-year peaks, you can see the direct impact of Russia on all those highlighted in red. You can see wheat, you can see Newcastle coal, European gas prices, energy prices, and all of this is going to feed through in a very big way to cost side impact on households, and it's also going to feed through to inflation expectations. So if you were to look at this chart here, it's showing us in red Brent crude prices versus the blue line is inflation expectations. The surge in Brent crude prices, of course, this is not fully updated. It could mean that inflation expectations get unmoored, and if that happens, you find central banks in a bit of a fix because they're caught between stagflation and they don't know what to do, whether to ease it because it's a negative impact on demand or to actually tighten policy, but at the risk that we sink into a recession because of that.
But Vishnu, then, how is this going to play out in the oil markets? Because 130 is obviously not a sustainable number because of all the impacts that you talked about, particularly stagflation. Wouldn't the big powers, especially the US, put pressure on oil producers then to open the taps?
I mean, you're right. That seems like the most likely outcome from these pressures. Typically, there is a great degree of autonomy for oil producers, including the OPEC plus. So they've been on their own timeline to restore supply. But given that this is a global crisis, no less, I think two things could happen. One is OPEC plus, particularly Saudi and UAE, could come under increasing pressure. It may not be an imminent response, but there's growing pressure for them to increase output, because those are the two producers with large capacity, excess capacity, especially now that a nuclear deal with Iran may be set back by Russia complicating that situation. So that could be one thing, one particular path that I see coming up. But the complexity in that is OPEC plus includes Russia, and you can imagine Russia will not be very happy with that outcome, with the US arm twisting, and so we may get a scenario where the OPEC plus sees a lot of tensions within it, and then it then goes back to being just OPEC sans Russia. The other one is US shale could become a lot more responsive as environmental and profit motive takes a back seat, and regulations are made a lot more friendly for shale to respond to these prices. And these are very, very imaginable outcomes given the severity of the stresses from all sides.
So Vishnu, obviously the war in the Ukraine, the geopolitical tensions dominate markets right now. But what are the other things that our investors are worried about that have an impact on markets right now?
I think investors have got quite a bit on their plate. I mean, they're also watching how central banks are going to deal with this situation. And they're also watching out for what China is doing in this region, because, China just over the weekend at the National People's Congress, they've revealed around 5.5% growth target, which suggests that they need to do a lot more stimulus. So we are looking for partial offsets. We are looking at dilemmas such as, whether it's the central banks or the fiscal authorities, how much buffer can be created. But all of this come at a cost, and there are trade-offs involved. So it does look like we are going to be in an environment that's going to be a lot more volatile just due to the uncertainty. So this chart perhaps sums it up that, we've got a mix of geopolitical shocks and policy dilemma. And the interaction of these doesn't give rise to any ideal outcomes. All of these will include trade-offs, and we need to be prepared for a lot more volatility. And I can bring up one example here, which is we've seen renminbi being very, very stable, partly because of flows being diverted there. We've also seen the Aussie being strong despite the beatdown in other parts of the markets because of the commodity boost. These are justifiable, but we bear in mind that we are in an era of potentially severe geopolitical shocks, in which case Aussie and renminbi may not hold up if we see a case of more extreme stress. So it's best to remain nimble and very, very cautious about how events play out from here.
Now, Vishnu, as always, thank you very much for taking your time to come on the show.
Okay.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please subscribe and like our various platforms, and check out our website, www.biztech.asia. Thank you very much for tuning in.